Welcome back to Rich for Purpose. In this video, I'm going to be talking about Senseonics, ticker symbol SENS. I've had a lot of people reach out asking me to make a video on this company. I've had friends texting me, is SENS a buy at these levels? I've had people emailing me asking me my thoughts on this company. So we're going to look at what the company does, their revenues, the pros, the cons, their competitors. We're going to look at my position and what I plan to do with this company. So just a quick explanation on what the company does. They have an Eversense device. This monitors your blood sugar levels. There's a little sensor that gets implanted into your arm. Then there's a smart transmitter that sits on top of that, and it feeds you real-time data on what your blood sugar levels are. Now, I'm not an expert on glucose monitoring systems or anything. So if anyone has used this device or knows anyone that uses this device, comment below and let me know what you guys think, because I find this really interesting. It has certain features like if you're sleeping, it'll vibrate and wake you up and let you know if your blood sugar's at a certain level, or if you're not by your cell phone, it'll vibrate and let you know like your blood sugar levels are low. And it stops people from having to prick their finger every single time to check their blood sugar. It's a pretty interesting concept from what I've gathered so far. So a couple of their key financial targets looking into this, if they hit these numbers, this is a 10x right here. So if they hit these numbers by 2025, that's a 10x stock right there. So can they hit these numbers? I don't know. And one thing is their operating expense excludes cost of goods shipped. Okay, this is flat. This is very, very flat. And we're gonna look at their revenues and their cost of revenues going from the past. And so this, I don't think they're gonna be able to keep this flat. But if they are, then this, I definitely think the stock could 10x by then. So couple of their pros. Medicare currently covers it. That's very good. They already are getting Medicare coverage. It's more cost effective. So a thing with the Dexcom device, it's pretty expensive. And if this device costs less, then people will more likely be able to use it, and Medicare will prefer people to use this device more. It lasts longer, so you don't that sensor that you get implanted, and they're even getting approvals for longer time coming in the future. So that Dexcom device, I know you have to change it out a lot more than what this company offers. The sticky film is better. So from what I've read, customer reviews is that they like the sticky film on this device more than on the Dexcom device. I guess it leaves like an irritation around where the device sits for the Dexcom versus this one. They said they like this one better. There's no needle. So from what I've read is that people feel like their free range of motion is better than having that needle stick into them, and it feels like there's something there all the time, versus this one, they said it feels a lot more freeing. The 180 and then the 365-day systems with once a week calibration. So I know with this current device, you have to prick your finger twice a day to calibrate it. So I know with the Dexcom, it says that there's no more finger pricks. You no longer need to do that. But with this one, you do have to do it twice a day, I believe. However, with the current, if they get these FDA approvals with their new device, the next device coming out, it's going to be once a week calibration. And I think that could be huge with it. And especially if they get it approved with kids. Ascensia could provide additional capital if needed. So I know that they had a rough 2020 with the coronavirus. I think part of that was supply chain issues, but they had liquidity issues. They had some cash problems in the beginning of 2020. So they reached out to Ascensia and had a partnership. And now Ascensia is cash flush. So if this company needs more money for research and development, or to roll out product lines, or to grow better, Ascensia could provide that capital if needed, which could potentially prevent them from having to do a stock offering. But that might, you never know how that works. And now this is some tinfoil that I totally just thought about. It's how my brain works. I go off on a whole nother path here, and it was just a thought. I did not read this anywhere. Chip implant tech. So if you think about it, if they're able to make a chip to monitor glucose levels, maybe they could sell this technology or spin it off in another way to monitor some other type of medical device, or maybe even like, payment systems for fintech or something like that. I did not read that anywhere. It was just thoughts I had that maybe could possibly be a pro in the future. Some cons to think about. Right now it's not approved for children. If they want to hit those growth goals, I think it's a must that this gets approved for children. Plus, I feel like this should get approved for children because of the certain benefits that this offers. Like the parents could monitor the kids' blood sugar levels, and then also the vibrating to let you know. I just think that it would be beneficial for children for this to get approved with children, because the Dexcom device and their other competitors, they are approved for children. So I don't know why right now it's not, but I think that it's gonna have to be for them to hit their goals. Another con is you have to prick your finger twice a day. So I know with the Dexcom, their marketing ploy is no more finger prick. But with this one, you still got to do it twice a day until they get that FDA approval. So that could be a con. FDA news could be negative. If they don't approve that 180-day system, this quarter, that could negatively affect the stock price. They could do another share offering to raise more money. That could be negative. Dexcom or other competitors could innovate and beat them. They have a lot more money, and they have a lot more supply chain and manufacturing experience, so they maybe could innovate and beat them at it. You never know. Cash flow break even by 2025. That's one thing I didn't like, that they're saying that it's going to take till 2025 to be cash flow break even, and that's kind of a long time for this. Investors could get impatient with that. And then supply chain issues. They're a lot smaller of a company. They don't have as much experience as these bigger companies. So going forward, unless they resolve these things, they may have supply chain issues that could tamper their growth a bit. However, a growth prospect for this company is, if you look at Senseonics market cap versus Dexcom's, and I think it's funny, Dexcom's thing was make sense, and Senseonics, it's SENS. So anyway, the market cap for Senseonics is about $2 billion, and then Dexcom just crushes them with almost at $40 billion. So imagine how much growth could be ahead for Senseonics, and I think that's a great thing. There's a lot of room for growth. Just to throw this in there though, I invested in Dexcom back in 2020. I believe I paid $220 to $250 a share for them. But what I plan on doing actually, I'll get into that at the end of this video. But that right now I'm up 80% on that position, and I'll go into their numbers. You'll see how good they have been. But breaking down Senseonics numbers, this is a horrendous situation that they have going on with their balance sheet. Their revenues are growing they are growing. You're going from 6 million to 21 million. That's decent. But their cost of revenues, you're going from 9 million to 40 million, almost double what your revenues are. You're paying, your cost of revenue is double that. So they're losing money. This is not a good situation as far as what their money is doing. They're not profitable. They haven't had any profits yet. They haven't had any earnings per share. They're cash flow negative every single year. Their operating income, it's just horrendous. This is absolutely disgusting. Horrible situation going on here. However, if they can get over this little hump, let's look at Dexcom's. They went from making 718 million to almost 2 billion. That is tremendous growth, and their cost of revenues are going up as well, but not double what their revenues are. and their profits are growing. Look at that, 492 million to 1.2 billion. That's excellent. So um I'm not pointing this out to show like Dexcom is so much better than Senseonics. I kind of wanted to point this out to show like if Senseonics can get over this hump, if they can get past this little period and get profitable, look at the growth ahead of them. Look at the market share that they could take, and look at that growth that's possible for them in those numbers. And imagine what would happen to their share price if they could hit numbers like this. So that's why I pointed this out. So what do I plan on doing with this company? What I generally do when there's a penny stock with a lot of hype and people start talking about it, when people start talking about it, I try and buy the stock up right there. I try and get up my foot in the door right there in the beginning. I got into Senseonics. I think I was late. I got in at $2.22, right? And then when the hype goes and people start talking about it, kind of like right now with Senseonics, I sell half my position and then I make the rest free. However, with Senseonics, you guys, this is what's so difficult right now is I feel like we're at peak hype, or we're at high hype right now for this stock, and a lot of people are talking about it. It would be a perfect time to collect my profits and make what I have free. But I like this company. I like this company a lot from what I've looked into it. And I think the benefits as far as, like the vibrating and letting people know, the free like I think there's a lot of benefits for this company and their innovation with blood sugar monitoring, and then a lot of things going forward, like their FDA approvals, their once a week calibration. And I think moving forward, they have a lot of things that could help benefit them. Not to mention the expensive cost of Dexcom. So with an innovator or a disruptor like Senseonics coming in, offering a product cheaper and a little bit better than Dexcom's, it could hurt Dexcom's growth, and Dexcom could actually move down. So what I've decided to do, I'm selling out of my position in Dexcom, and I'm going to put it all into Senseonics. I already have a position in Senseonics, again, at $2.22. And I have 3 of these $3 calls that expire today. So what I'm going to do is I'm going to exercise these 3 calls. So that'll put me at 400 shares. Now, I'm going to exercise these at $3. Even though I pay $2.22 with penny stocks, I do not like adding to my position for more money than I spent. So I'm going to average about paying $3.70 per share today with these contracts. But I'm going to exercise them. I'm going to fill them. I believe in this company long term. I think they have a lot of growth ahead of them. It's just they got to get profitable. They have to get over this hump. I think with their earnings coming out in March, this could drive it could drive the price down, and they have a couple hurdles to jump over. However, I think that the benefits, the risk reward ratio is really good for this company. So I decided I'm going in. I'm taking a big stake in this company, and this is going to be one of my bigger holdings, believe it or not. We'll see how it plays out. I'm not going to add all my money today. I'm going to get those 300 shares for my contracts, and then I'm going to wait after earnings, and then I'm going to add after that. That's my plan moving forward. If you guys would like, click the link in the description to join my Patreon if you want to support my channel and keep helping me grow. Please like the video, subscribe to my channel. I appreciate it, and I will see you guys next time for the next one. God bless you. Have a good one.